Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. What if I told you that right now you could walk into the same banks that would deny you and walk away with $50,000, $100,000, or even $150,000 in available credit without showing a single pay stub, tax returns, or business history? In this video, I'm going to show you how to go from 0 to 100,000 or even more than that in funding, even if you've been denied before. I'll show you how to build the right credit foundation, how to structure your funding sequence, and how to position yourself so banks will want to work with you, not the other way around. Because when you understand how lenders think, everything can change. So before we get started, do me one favor. I want you to treat this video like a masterclass. Close any extra tabs, put your phone down, get to a quiet place where you can think clearly and absorb every single detail. Because if you apply what I'm about to show you, you can literally change your financial future. So without further ado, let's get right into the video. Now, I want to start with the honest part. I know the embarrassment of being denied. Back in 2019, my credit score was around a 426. I walked into a Citibank branch here in Las Vegas thinking I was going to get a secure credit card and start the rebuilding process, and I wasn't even allowed to open an account. I knew a lot about finance, but I didn't understand that credit is leverage. I didn't understand that lenders don't just look at the number, they assess a profile. That day was a turning point, and I decided that I would never be confused about how funding works ever again. Now, when we fast forward almost 7 years later, I have been approved for over $1 million to date across personal and business credit by learning the sequence, the data points, and the bank behaviors behind approvals. And I've documented this process across hundreds of videos that I've shown each and every one of you, especially to my early subscribers, and you saw how I did this step by step. And today, I'm handing you the blueprint that I wish I had back then. Every time I make a video like this, you're receiving my most up-to-date thought process. So by the end of this video, you will know how to move from 0 to $100,000 in business funding without any proof of income, and you'll understand how to set up your credit foundation, how to select banks in a way that gets you multiple approvals, and how to structure your funding sequence so that you are not met with resistance along the way. Everything here is designed to remove any guesswork. And if you stay until the end of this video, I'll also walk you through a practical 120-day sequence that anyone can model immediately. Now, I need you guys to understand that funding is not a lottery ticket. It is a system. People fail when they treat it like a quick trick instead of an actual discipline. You do not beat an algorithm, you align with it. You don't hack a bank. Instead, you make yourself the most logical, low-risk choice by showing the exact data the bank wants to see. Now, again, I've said this before, hack is a buzzword. I know it gets people to pay attention, but what I'm really talking about is having a strategy in place in order for you to be fundable. Lenders are scanning for the absence of risk, not the presence of perfection. So for the strongest approvals on business credit, your personal credit report should reflect a clean 24-month, no late payment, no collection, and no charge-off profile. You should have a mix of accounts, which means at least 1 or 2 installment loans and at least 2 revolving accounts. Your revolving utilization should sit around 10%, and if you want to be aggressive, keep it to the single digits for a full 60 days before your application. Your average age of accounts should be at least 2 years. Now, if it's not there yet, you can still move forward, but you'll want to be more strategic with sequencing and timing. Now, I'm also going to show you a different method for you to actually add on history that you can keep permanently, and it's not authorized user accounts. So we'll talk about that shortly. I do have an entire video on how to structure your credit profile. So if you do want additional details, then please check that out. I'm going to link it right here. Banks run your credit profile through models that have been trained on millions of outcomes. Now, right now, FICO remains the industry standard used by 90% of top lenders. There are over 16 distinct versions of FICO scoring models that are in use today. Now, although lenders commonly use around 28 different variations across all 3 credit bureaus, FICO 8 and FICO 9 are still the most widely used models. There are newer models, including the FICO 10 and FICO 10T, which are designed to offer more refined risk assessment. The point I really want to make is that the model doesn't care about your story, it cares about the math of risk. When your patterns look like instability, for example, new accounts all at one time, high utilization, store cards, small limits, or recent late payments. You get defensive approvals at best, or worst, a denial. You cannot overpower the algorithm with explanations. You must feed it data so that it recognizes you as being a safe borrower. That means timing your applications when your utilization is the lowest, when your payment history is pristine, and your average age of accounts is not tanked by a flurry of new lines. Now, if you have negative items on your credit report that would prevent you from having a fundable credit profile, that is completely okay. You can fix this, but you have to be methodical. Now, I recommend using Rising. Rising is a platform that helps you by giving you access to your credit reports and your scores by showing what may be hurting your credit and helping you take action through custom dispute templates. You also get bureau response tracking, rent and utility reporting to help you build positive payment history. And that's what I was talking about when I said you can actually increase your average age of account history. On average, by adding 24 months of payment history, you may see a score increase from around 30 to 45 points on your credit profile. Now with Rising.com, they can actually backdate 24 months of rental history or even utility reporting history. That can increase your account age. And if you increase your account age by about 24 months, you'll definitely see a dramatic increase in your credit profile. And unlike being authorized user accounts, this is not temporary. This will stay on your credit report. Rising also includes a personalized credit game plan, score and goal tracking, and educational tools, and guidance on products like secured cards and credit builder loans. Right now, you can get access to your credit report for $1 through their 7-day trial. You will find a link in the description below. I highly recommend that you check it out. Now, the first thing that I would do once you sign up for Rising is pull a tri-merge credit report. That way you can see TransUnion, Equifax, and Experian side by side. Secondly, you can look for inaccuracies, any mismatched dates, wrong balances, duplicated accounts, or incorrect statuses. I have plenty of content that show you exactly how to repair this using Rising. It'll be down in the description below. There is a credit repair playlist. All this information is provided for free, so if you think that you need this, I would get to work and repair your credit profile. If you have a thin credit profile, then once again, consider the rent and utility reporting with Rising that backdates for 24 months. You can also get a secured credit card with a reputable bank that graduates to an unsecured version. You want to use that responsibly for around 6 to 12 months. If you want a list of the best secured credit cards that graduate, I have an entire video covering that topic as well. I'm going to link that right here for you to watch. Your goal is not to load your credit profile with gimmicks. Your goal is to have a clean credit profile that's steady, bank friendly, and has a pattern of paying on time. And before you add any new credit card accounts, you want to always request a credit limit increase on the cards you already have. This is one of the easiest ways to boost your total available credit, which does lower utilization, and it will strengthen your internal bank score without hurting the average age of your accounts. Many banks will approve a soft pull credit limit increase every 6 months on average if you have consistent on-time payments and you keep utilization low. If a bank offers an income update form inside of their app or their online portal, complete that before you request that credit limit increase. A higher stated income paired with on-time payments and disciplined utilization can result in a meaningful bump that sets you up for your next approval. Now, let's talk about the exact order of operations that keep approvals flowing. Now, I want you to think of this in 4 phases, but I'm going to lay it out in 10 steps. So step number 1 is pre-qualification. You want to check if you're in range for the bank product without a hard pull. Now, many banks and issuers will give you a soft pull estimate of your approval odds. So for today's video, we're focusing on business credit cards and ones that will give you soft pull approvals, like American Express, for example. As I've said before, business credit cards offer fast, accessible capital for new or small businesses, and that doesn't require previous bank history. And they often do this with higher credit limits than your personal credit cards. Business credit cards provide immediate cash flow. They allow you to earn lucrative rewards, build business credit, and help separate your personal finances from your business expenses. And step number 2 works in tandem with step number 1. Whenever possible, when you're pursuing business funding, you always want to use the soft pull over the hard pull. This will reduce inquiry bloat. Now, when it comes to business credit cards, you can remove the hard inquiry for those cards because they do not report to your personal credit. This also works with step number 2. You want to remove any hard inquiries once you're approved for business credit cards. Now, I have an entire video showing you how to do this with Rising. I'm going to link that video right here. Now, I do want to state, even though you can remove the hard inquiry, it can take a little bit of time sometimes, and you can't always control how long that will take. So you always want to be careful and look for the easiest ways that you can get these cards without hard inquiries or knowing that you're approved right away. Which brings us to step number 3, sensitivity management. Now, some issuers are new account sensitive and they become very cautious if they see too many recent approvals. They can also review your business credit report and they can see your hard inquiries on there. Even though business credit cards in most instances will not report to your personal credit, they can again see them on your business credit report, so you still want to be careful. I recommend pacing your applications to avoid spooking them. Step number 4 is to be aware of the double dip window. Now, some banks allow you to actually get a second or even multiple products within a short window under the same inquiry. Now, American Express is a great example of this. You can also do this with Truist historically, as well as banks like PNC. If you know the rules and the timing, you can multiply results from a single hard pull. Now, I have multiple videos that talk about multiple banks and their data points. Again, I can't go over like every single bank in this one video, but I have a business credit playlist down in the description. You can look for the bank of your choice. I've talked about almost all of them, right? So if there are double dip opportunities, I have said it in those videos. If you know the rules and the timing, you can multiply results from that single hard pull, then also remove that hard pull from your personal credit report. Step number 5 is understanding doc levels. Now, people love to say no doc this, no doc that, but do not walk into a branch asking for a no doc credit card, loan, or business line of credit or anything like that. Instead, ask what documentation is required for specific levels of funding. Now, many entry-level business credit cards are stated income only, which means you certify your income, but you're not required to upload, let's say, pay stubs or business revenue or tax returns or anything like that. Now, as you build history, banks will graduate you into low doc products that may require 6 months of business bank statements, which should not be a big deal. And then full doc products like term loans or larger lines of credit that may require tax returns or a profit and loss statement and a balance sheet. However, that's not the focus of this video today. I'm just making you aware that there are different levels for no doc to low doc to maybe high documentation. Remember, you're not gaming the process, you're growing into it. You want to speak the language of a serious business owner and the doors will open a lot further for you. If your current credit score is a 620 to a 679, you can still move forward in this process. The terms may not be as friendly and the rates will be higher, but this is your bridge, which brings us to number 6, use early credit to bridge the gap. Think of this as expensive money that you will not keep forever. Use it to establish behavior, build a deposit relationship, and demonstrate capacity. Now, normally with business credit cards, you have 0% APR, so this may not matter, but let's say that it ran out. I wouldn't be surprised if the credit card had a 29.99% variable APR. Again, if your credit score is lower, expect those higher amounts. Which brings us to number 7, build that banking relationship. Once that relationship is built, you can then roll those relationships forward into 0% APR credit cards and better structured lines once your profile has been strengthened. Your first round proves that you can handle an account, the next round rewards you for it. And I always recommend opening up a checking and savings account at your targeted institutions. You want to fund them with a reasonable opening deposit. Then you want to make consistent weekly deposits for at least 90 days. I prefer 6 months, but 90 days again will be the minimum. Now, the amounts don't have to be massive, but the pattern, that's going to matter more than the amount. Now, what you're doing is giving the bank a live demonstration that you can manage cash flow, that you can bring money in, and you can maintain balanced discipline. When a banker sees activity on your account for, let's say, 3 months straight, you no longer appear to be a stranger. You're a client. That reduces friction and approval time, especially for other business products. Step number 8 will be your deposit cadence on future accounts. Now, every 90 days, maybe add 3 to 5 new banking relationships. And I'm not saying like 3 to 5 new cards. I'm saying 3 to 5 new deposit accounts. You want to rotate those across various institutions that pull different bureaus. That way you're not overexposing yourself to one. Again, we can remove all these inquiries, but depending on how long it takes, it's better to have them spread around. Now, step number 9, over the span of a year, this creates a lattice of banks that know you, that have seen your activity, and they're willing to extend you credit. When you're ready to sequence your business credit card applications, you're not cold applying into anything. What you're doing is asking existing partners to extend business credit based on a relationship that they can verify by looking at your account. And finally, step number 10 is for you to stay consistent in this process. Now that we've broken down those 10 steps, and I like to break them into, let's say, 2 phases. Phase 1 is the first 5, phase 2 is the second 5. Let's talk about phase number 3, which is going to be credit card stacking and funding sequence. Because we've talked about the strategy that most people never see in full, because credit card stacking is not randomly applying to 10 banks in a week. Credit card stacking is a structured progression that will use the terms of one approval to create the condition for the next one. So let me walk you through a clean example. Suppose you secure a business credit card with an issuer that offers a long 0% APR period. Let's say it's 18 months. Let's say you receive a $10,000 limit. You're not going to spend this recklessly. You are going to use that line to build deposits at another bank that you want to target next. You're going to open a business checking account at the next bank. You're then going to deposit a modest amount. You can add, let's say, $500 to $1,000 each week, and this amount will be routed from the 0% APR card in a way that is compliant and very clean. Now, if you want to know how to do this, I have an entire video that shows you how to pay yourself from a business credit card. I'm going to link that video right here. Now, over 90 days, that account will show steady inflows of healthy balances, and then you can apply for the bank's business credit card or a business line of credit if that's available. You now appear to have an active business with consistent deposits of, let's say, $8,000 to $10,000. Now, this next bank may approve you for a $10,000 to $20,000 credit card, and you now have a total available amount of around $20,000 between these 2 institutions. You want to keep your utilization low, continue paying on time, and repeat this pattern with a third bank or even a fourth one. In 4 cycles, you can transform a single $10,000 approval into, let's say, $50,000 or even $100,000 in business credit, still riding 0% promotional periods that can extend your runway and help you build revenue. You want to also pay attention to which bureaus that the banks pull from and their geography. So if your Experian profile is crowded, you do want to take some time to remove those inquiries. That's the reason why I would look at your TransUnion profile if it's clean, and then start using banks that actually lean on that. Or if Equifax is completely clean, then you can sequence the banks around that one. The goal is that you distribute inquiries so that you don't stack too many of them on a single bureau in a short window of time. Also consider the reporting cadence. Now, most business credit cards, once again, do not report to your personal credit, which does protect your personal utilization during your building period. However, don't forget that there are business products that will report to your business credit bureaus, and that may actually get pulled by the banks, which could hinder you getting approved. Now, certain issuers are sensitive to the numbers of new accounts opened in the last 90 days. So if you do plan to apply with a bank that is known for that, then you want to be cautious. Give yourself a cooling period, keep your utilization low, and avoid any accidental late payments. Let your newly opened accounts age a little bit before reapproaching these particular banks. During that cooling period, focus on building your deposit activity and asking for any soft pull credit limit increases with banks that you already have a relationship with. This keeps your profile improving without the risk of a denial that could have been avoided just by being patient. As your relationship deepens, you will graduate from stated income business cards into low doc lines of credit and then into full doc term loans. Think of this as like a ladder of how you can actually get business funding. The first rung of the ladder is always stated income, that's no doc. The second run is, let's say, 6 months of bank statements. You'll see this with some business lines of credit or even some business loans. Now, the third run is one that has 2 years of tax returns plus financial statements. Now, if you know a bank's documentation threshold in advance, you can plan your deposit behavior accordingly. For example, if a lender will offer you, let's say, a $50,000 line of credit with a strong 6-month statement history, then you want to keep your average daily balance healthy and maintain a consistent deposit for a clean 6-month period. Again, when we're building these deposit relationships, you're already going to have all of these statements in place. If another lender will stretch to $100,000 for, let's say, 1 year of returns and a very simple profit and loss statement, then work with the CPA to keep your books organized. That way, you're already prepared for this and you can actually get approved for much larger lines of credit. Now, you can technically secure business credit as a sole proprietor just using your social. However, if your goal is to scale and separate risk, then I highly recommend establishing an LLC or a corporation using your EIN. That is the most professional path in order for you to do this. Lenders will take you more seriously and you gain a clearer bookkeeping picture. That way you can actually protect yourself and get future products. That said, don't let paperwork delay you from building your momentum. So if you're watching this with a 680 credit score with no LLC, you can begin building your relationships as a sole proprietor and you can make the formal business structure your very next step. You want to continue your progress. I don't want you to feel like you have to actually be like pigeonholed, to wait just because you're not exactly structured yet. Now, I do have an entire video that I'm going to link here where I talk about getting business credit cards as a sole proprietor. Now, moving into phase number 4. To wrap this up, let me give you a clean, practical sequence that you can start right now. So in the first 30 days, audit your credit report. You want to pay revolving utilization down below 10%, set things on auto pay. I would do that for every account if possible, and request soft pull credit limit increases whenever you can. Days 31 through 60, you want to open at least 2 new deposit relationships with banks that pull different bureaus. You want to fund each account with an opening deposit and commit to weekly contributions. In days 31 to 60, you want to stabilize your balances in the single digits, keeping your deposits flowing. Days 61 through 90, you'll secure 1 to 2 business credit cards with a 0% APR period and a starting limit of at least 5 figures if possible. You're going to use a portion of that 0% line to seed weekly deposits into a third bank that you plan to target. If you're not sure how to liquidate a credit card, once again, I have a video where I discuss this using a business payroll processor and also another tool. So I'll link that video here as well. There is a limit to how many videos I could link. I think I've mentioned 5 already. So just know if you can't find it, go to my actual channel, type into the magnifying glass the video that you're looking for, like liquidate credit cards. You'll see that pop up and you'll find that video. You want to maintain clean statements and demonstrate steady cash flow because later on you'll be able to use those statements to secure even more funding. In days 91 to 120, apply to the bank where you built the deposit relationship and you want to get their business credit cards. Immediately after approval, if the bank allows it, double dip for a second product within the same inquiry window. Then repeat that rotation with a 4th bank that pulls a different bureau. If you time this correctly, you exit day 120 with multiple new approvals, a wider distribution of inquiries that can be removed, and deposit relationships that will support the next tier of funding. And if your credit profile is structured properly, you should be able to walk away with $100,000 or more from your funding sequence. One of the easiest ways to get tripped up is to not let your utilization spike while you're in the middle of approvals. Remember, business credit cards don't report to your personal credit, but if you're using your personal credit cards, then that utilization spike can cause you to either get denied or lower approvals. If you need to, pay your credit cards mid-statement cycle, whatever has to happen to keep your balances low. If your credit card offers, let's say, a statement due date change, then move it to a cadence that aligns with your income. That way you can pay earlier and keep closing with low balances. You want to treat utilization like oxygen level in a room. You want to stave the fire off. That way you can prevent the problems. When you receive a meaningful approval, then your job is to leverage it into a cadence. If a bank gives you $15,000 on a business credit card at 0% APR for 12 to 18 months, you don't use it recklessly. You use a portion of that to create cash flow into a second bank account and you stage your next ask. As soon as you hit the 90-day activity mark with the second bank, you apply for the next product. If permitted, you double dip. Each new approval will become a lever that moves to the next lender. This is how you get to $50,000 and then $100,000 and then $150,000 without presenting income or documentation. What you're doing is layering relationships and timing things properly. You're not gambling or guessing. Now, I do have another video that talks about securing your first $150,000 without proof of income. I'm gonna link that video here, but again, if I hit my limit, you'll have to search for it. That video talks about a funding sequence at the end, and it's especially helpful if you have a thin credit profile. I'll also cover the credit cards to apply for it in a little more depth. I also recommend watching my 9 banks that will approve a new LLC for $50,000 without proof of income. In that video, I give you more options to choose from. I want to thank you guys so much for watching this video. So once this video is over, do me a favor, go to Rising, pull your reports, verify the accuracy of the report. There's a link in the description for you to do that. You want to make sure that your credit report is fundable and it's ready to go. If you can, open at least one new business checking account. I would also open a savings account, and you want to fund it. Set yourself a calendar reminder to make weekly deposits and request your next soft pull credit limit increase on the exact date that you become eligible. Those 3 actions should be taken today. Doing that right now will change what is possible for you in the next 90 days. Now, if this masterclass helped clarify the path from zero to getting $100,000 or even more than that in business funding without any proof of income or business history, then please take a moment to implement all this information right now while the details are still fresh. And if this video did provide you with any value, please drop a comment below. Let me know that this video actually did help you. If you also have any questions, drop that in the comment as well. If you've used a similar funding sequence, please add your experience to the comments below. All that does is help the community. As long as you have a strategy, discipline, and execution, then you're going to be successful. The banks are already lending. The only question is whether or not they're lending to you. So let's change that starting today. As always, thank you guys so much for watching this video, and you have a wonderful day.